You are listening to the Manument Podcast. My name is Casey, and I'm here with my buddy Glenn Johnson, investment advisor and founder of Jabez Financial right here in the Uncasville area. All right, Glenn, shall we get into some retirement talk today?
Absolutely. Let's get started.
I want to start today with some advice from the Oracle of Omaha, Warren Buffett, because Berkshire Hathaway recently held their annual meeting, and for the first time in 60 years, retired CEO Warren Buffett was not on the stage. He watched from the audience, and CNBC later asked him how he sees the stock market right now. Let's take a listen.
I've compared the markets to a church with a casino attached, and people can move between the church and casino, and I would say there are more people in the church and more people in the casino. But the casino's gotten very attractive to people. It's gambling, just totally. So we've never had people in a more gambling mood than now. But that doesn't mean that investing is terrible.
So, Glenn, my question is, if this market mood feels more like gambling than investing right now, what guardrails should retirees have in place? What are your thoughts on what Warren had to say?
He's so on point. The church casino analogy, it's really interesting because it illustrates the conflict between what we want and what we know is best for us. And when it comes to investing, there's so much to learn from someone who has decades of success like Warren Buffett. And now, see, there's wise investing and there's pure gambling and everything in between. And as an experienced investor with wisdom, like Warren Buffett, who avoids investing in IPOs and startups, it's because he doesn't want to get caught up in all the hype of the latest new thing, because there's always something new and exciting. But all that glitters isn't gold.
Right.
And that's the point.
Right. So the headlines might be exciting, but the plan still has to hold steady. So for somebody listening, how do you personally tell the difference between a smart opportunity and maybe some hype that's basically a bet gambling for them?
Well, see, first we recognize that investing is a good thing. Gambling isn't, right? So we want to invest in things that we want to see grow. Like even investing in our kids, we are going to invest in things we want to see grow and mature and develop. But real investing is not a get-rich-quick scam. Just like, raising children doesn't happen overnight. But it requires knowledge, experience, and patience. And this is why my most affluent clients rely on me to help keep them on track for success. Here's the thing. The best in every industry, they have advisors with experience, which is why I have them too. It's important to me to stay on top of my game and make sure that I consistently provide the absolute best financial guidance possible. See, in fact, in doing all things, we can either do them on our own versus getting good advice. And they look different at each stage of life, but they work the same way.
I like that. I want you to paint that picture for us then. What does doing it yourself versus getting good advice look like in real life?
Yeah, well, we can see it in other people easily. Like teenagers, they don't often listen to their parents because, well, they want to do what they want to do. And although as parents, we know more, we have more experience, we have our kids' long-term best interest at heart, and they know it, yet they still don't always listen. We'll hear them say, well, I'm 18 now and I can make my own decisions. So we're like, yes, you can. You can you can choose who you listen to. You can listen to someone who's 18 years old, or you can listen to someone who's got 3 times as much life experience as you. It's your call. It reminds me of a sign that my mom had up on the refrigerator when we were kids. And it said, "Attention teenagers, act now, move out, get a job, pay your own bills while you still know everything."
What a tempting offer.
Right. And have you ever heard that what you do speaks so loudly that what you say I cannot hear? Well, we've got to do first the very thing that we want others to do. If we want our kids to take wise instruction, we've got to learn how to seek it out ourselves. And the fact is, at this point in life, in or near retirement, we've got a lot more at stake.
We do. And that's the part that I really want people to sit with. When you're in or near retirement, that margin for error really shrinks. So I'm curious, Glenn, what changes about the way that you want somebody to approach risk at that stage when they're in or getting close to retirement?
Well, I've witnessed countless times over the years how much more important it becomes to take a responsible approach to investing the closer you get to retirement. Because like we were just talking about this, the consequences are more severe, more is at stake. And lately, many of the investments I'm seeing that people have in their existing portfolios, those investments, those allocations, those holdings, they're looking more and more like they've just been placing bets instead of making sound investment decisions. See, yes, there's risk and reward go hand in hand. But for the last 18 years, all we've really seen is the reward part of taking risk.
And that can blind you a little bit. So what are our guardrails here, Glenn? What rules do you want your retirees to follow so that they're not letting a hot market quietly turn into a really expensive lesson later on down the road?
Well, that's the thing. There's financial tools you can use that you can put in place that have some guardrails that limit the losses, protect downside risk, because you've seen the gains in the market. You've seen your account appreciate significantly. So unless there's some sort of stop losses put in place, we're running the risk. It's almost like I think I mentioned it not too long ago, how if someone's got $1 million and they're saying if the market drops 10%, then I'll get out. Well, that means they've already committed to losing $100,000. Mm-hmm. And my argument is, well, why not make sure you still keep that $1 million and see how much more you can get it to grow, but have a tighter grip on a closer safety net for that next big dip. And speaking of because otherwise we're gambling. And let's take the state of Connecticut. The state of Connecticut takes in $900 million a year in revenue from gambling alone.
Wow.
Tell me the house doesn't always win.
Yeah.
Right? Your investments that were good and were a good buy, a smart decision when you invested them, most likely have appreciated to the point of becoming overvalued and are in great need of a correction. So my suggestion is, don't let the house win by allowing your profits to just evaporate. Take the win, get a second opinion, lay down a strategy that'll give you the peace of mind you're looking for.
When somebody comes to you for this second opinion, Glenn, what's the first thing that you're looking at to see if their plan is built for retirement reality, not just a good market at the moment? When you're going through it, what are you keeping your eyes peeled for?
Well, first we got to find out, what do they want their retirement life to look like? What do they want their daily routine to look like? When do they want to get up? What kind of trips do they want to take? What are their fixed living expenses? We want to make sure your fixed living expenses are covered by your fixed income. And then there's the extras, the trips, the vacations, the giftings, the donations, helping with the grandchildren, whatever it is. When there's variable expenses, then we look at, then you can have your variable assets pay for that. But we have to start with what kind of retirement do you want to have? Then we put a price tag on it. How much is it going to cost? And then looking at the collection of assets that you have, can we legitimately expect those assets to continue to yield the returns you need to live the way you want to live? And what's happened is we've looked back over the last 18 years, and the market has had such an exceptional performance that we can look at this and say, well, as long as the market keeps doing what it's been doing the last 18 years, I'll be able to live just exactly the way I want. And that would be true if the market if the market just stopped having secular bear markets. But any person with experience knows that's not a realistic expectation. And I want my clients to be prepared for that so that they don't get caught off guard when they're living in retirement and all of a sudden the bottom fell out of their investments and now they're not taking that vacation or they're not buying that new car. Mm-hmm. Because of all of this, and everybody's situations and dreams and desires in retirement are different, and people are working with different types of assets and they've got different experience, This is why I invite you to come in for a one-on-one conversation with me so we can discuss some of these things just to make sure that you've got what you need, that you're properly allocated and well-positioned to be able to live the retirement that you want. So I invite you to give us a call at 860-288-9977 and schedule a time to come in for a conversation, and I'd love to hear what you're looking forward to.
Thank you so much for listening to this episode of the Manumit Podcast. Make sure you subscribe wherever you get your favorite podcasts so that you never miss an episode, and we will see you next time. Take care.
Investment advisory services offered through Jabez Financial, LLC, a registered investment advisor firm. Registration is not an endorsement by securities regulators. By contacting us, you may be provided with information about insurance products, including annuities, offered through Glenn Johnson, Connecticut Insurance, license number 4628409. The firms are separate entities. Annuity guarantees rely on the financial strength and claims-paying ability of the issuing insurance company and are not offered by Jabez Financial, LLC. Read your contract for restrictions, limitations, or penalties. Jabez Financial, LLC is not licensed in all 50 states. To find out if Jabez Financial, LLC is licensed in your state, please call 860-390-0093.